Okay. So right here, I know if I take this trade, I have a minimum of 2-to-1. I have a 4-to-1 trade just to the point of control. If I get the rotation to value high, I now have 8-to-1 opportunity. I can take this trade. It's worth it. Okay, $3,200. Now, what happens? We come down and we take out the IB low. All right, so if you got greedy and you couldn't get out of value high because you're greedy, and you wanted 5,000 in the trade instead of 3,000, now you just got stopped out. Right, so this is what you don't want. Right, so you want a profit target. You got to know where you want to get in and where to get out. Okay, now we breached our zone and we took out the low of the initial balance. Now the short play is intact, right? So now you can take a short. Take a short initial balance extension play right here. All right, so let's do the same risk. We're going to risk 20. I try to stay consistent, what my risk reward is. We'll just do that for now. Okay, so here's the entry. The market breaks fast, it goes, doesn't look back. Okay, so if you had a sell stop in here getting short, you're triggered. Okay, this gives you an opportunity of another almost 9-to-1. Okay, another 180 NASDAQ points. Okay, that's another $3,600. Okay, so you had 3,200 up, 3,600 down. Can you hear me? Testing. I can hear. Okay, Poppy, you can hear. I'm not sure, David. Okay. All right. So these are the things that I'm looking at. I'm looking at areas where I can limit my risk with a potential for a good trade. All right. So these are the things that I look for. You could be the range bound guy. You could be the breakout guy. You don't have to do both. You could just pick one, but just know what your opponent is up to. Okay. There's a good chance this could have came back down here and not taken out the low. All right. Look at this one. Just rotated up, went to value high. I mean, it's classic range bound trade. All right. It's nothing fancy. It is what they do. Okay. There it is. All right. So same thing. Same where the longs were. Now think about this. These guys are getting long here, right? Risking this low. They get paid. Market comes back to that same level. Guess what? The buyers are no longer there. And what happens? We plow through the whole area because now Elvis left the building and now it's time to extend the range. Okay. They're done with their range bound trade. They did their business. They're out. Now it's time to find another trade location to facilitate trade. These are auctions. Okay. When there's no buyers, what happens to price? Just standard supply and resistance, right? If there's no buyers, what happens to the price? If the buying dries up, what happens to the price? Right, it drops, right? It's going to find a level where buyers are enticed to get back in the market. Yes, the price will decrease. Okay, so the buyers, they got paid. They did their thing, right? I'd be happy with that, right? 8-to-1 or 4-to-1 opportunity. Beautiful. Take my money and wait. Wait for the market to get to another level where I think it is worth the risk. All right, let's put the overnight data in here. Put all the data. Okay. Now let's look at a couple things here. Let me go to a 30-minute chart. Okay. And let's look at some of this choppy mess that we got going on. Okay, this was a beautiful reversal here. And this is look at this reversal. I left it on the chart to show you guys. All right, so look, we're heading up, we're heading up. Trend's your friend, it bends. All right, so what happens? We break structure here, right? We close below it. We come back, we retest it. We get a little bullish close, but then it fails right away and then boom, right? They just gave it up. Like, all right, we're done. Okay. And then we get this nice pullback, in the NASDAQ. All right. Here's the NASDAQ again. So what do we got here? All right. Similar situation. We're heading up. All right. And what do we get? We have these right here, pretty symmetrical. All right. So this is the one swing there. Market comes up right here. Okay. We have the crown formation. Okay. So, oops, what am I doing? All right. So there's our crown. Comes up. Right. And then we have a little bit of symmetry there. Okay. So we got this high right here. This one came up almost to the tick, a couple ticks away, and then we reverse down. Okay, so we're trending up, we break structure, and then we start to fall. All right, we what do you call it? Roll over. All right, and now we kind of have what? What do we have here? Anybody see something here? Let me take some of these lines off. What do you see? Anybody? What do you see here in this picture? Ah, there you go, fam. Fam, you're doing great. You're really soaking it in. Right? Doing really, really well. Okay. All right, so let's look at this. So we have shoulder, right? I can put it here. This one. Shoulder, head, shoulder. Okay, then we take our measurement from the top of the head to the neckline. And then we drop this down to project our move to the downside. That brings us here. Okay, we almost got there. Very, very close. Okay, we took out this area. This is our neckline, right? This was a support, 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 resistant, resistant, boom. Right? And we got almost to the measured move. Very, very close. I call that a win. Okay, so this pattern, this head and shoulders, gave us a projected downside move to about 2097. Got to 2985. So that's still a very, very nice move. Okay, based on a pattern. All right, what else do we have here? Sorry for all the lines, but my charts I draw like crazy on my charts. So, all right. So now we have what? We have an outer trend line. We have an inner trend line. Okay. So now look, watch this here. So let's pretend like this doesn't exist. Okay. This is our market. Okay. All right. So everything to the right doesn't exist. We have these highs here across the top. Okay. We have high there, high, high. We draw across top. We take the inner trend line here to here. All right. Now watch. We take this line and we just project it out. Okay. We're going to project it out. All right. We're going to take this line and we're going to project it out. Now let's see if the market gets near an area of one of these trend lines, maybe there's an opportunity to sell up against it, right? Now, if it breaks this line, there's a good chance it might go to the next line. All right, there's a very good chance if it breaks above it and you get a close, it might go to the next line. So let's just pull this chart and let's see how this breaks down here. All right. So trading, right? So trading down, and we're trading, and we're up. What happens? Up. And guess what? Look at that. So we projected this line from this day, right? From December 27th. We projected the line out. And what happened? The market comes back. We test it. We try to break above it. We fail. We get back below, and then we sell off. Okay. So this was a line projected from a week ago. Right? Remember, the market looked like this, and we projected the line. And there we go. Boop. And nope, we're not going to rally, and we're going to continue. Okay. So that is how you can kind of project the market. You don't know what's going to happen. Okay. ACH, but it gives you something to lean on. Okay. And what are you leaning on? You're leaning on these buyers. This was a neckline where we broke out, right, of a head and shoulders pattern, and we're getting close to it with a downward sloping line. There's a good chance that there's going to be sellers up in here at a resistance zone that will support with a downward slope. Okay, so there's a good opportunity to take a short here, and you could limit your risk. All right. Any questions right now, or? You see another head and shoulders? I mean, there could be a massive one here, right? We might have a massive head and shoulders brewing here, you know. And then if you take this one that I think you're talking about, right? You go from the top of the head to the neckline, which is right there. Oops. Okay. And this would be our projected move if we break out below the neckline. That would bring the NASDAQ down to approximately 19,900 ish. Okay. So this might be something. If now look, if we can stay below this line, okay, let's get rid of this. If we can stay below this, there's a very good chance that this market could do what? But we have to respect the line, right? We can't go above it and go up, right? We have to respect the line. And then there's a good chance we can, mess around and then maybe get down there at some point, right? Stuck. Right? So there's a good chance. There's a good chance that if we can maintain this downward slope, we could get a move down there, right? But we got to stay underneath this line. Coach, when placing the long tool, how do you use it? Yep. All right. So let's look at this on, let me take this off here. Let's go back to the 5-minute. Okay, created for greatness. So here's the long tool. You go over here to this here, long position. Okay, and then you drag your risk to whatever you want your risk appetite to be. So if it's 20 points, if it works in my favor and I can get filled, I'm filled. And then this you drag up to wherever you think your profit target is, right? So for me, I got to have at least a 2-to-1 opportunity to even take a trade, a potential 2-to-1 opportunity, right? I won't take it. If, let's say, point of control was right here, down here at 1-to-1, okay, I'm buying it here and point of control's all the way down here, I'm not going to take that trade. If point of control is at 2-1 or better, and there's a good chance it might get there, I'll take it. If it's 4-1, beautiful. I'm definitely in for that. And if there's 8-1, I mean, it's kind of a no-brainer, right? So it's all about risk to reward ratio. Okay. And then, for me, I throw on the volume profile, which gives me an idea of where the market might be, or, the potential for it to be. So here's our early range. Okay. And then here it is. You come down a little bit and I'm measuring my point of control, right? This is point of control. So if I get filled down here, I know I have a very good chance. I could get stopped out in a blink. It can happen to anybody like it did here. This just fell out of bed, right? But the rotation to the point of control at this point is worth the risk of the trade. Okay. I can get 4.3-1 reward to risk ratio. All right. That would be target one. And remember, I said target two is going to be value high. Okay. So value high is where? Right there. Okay. Here's value high. And it got right to value high. A couple ticks and then it fell down. Okay. And this is an 8.36-1 trade, to value high. Even if you took it off at 8-1, right? That's 160 NASDAQ points. That's $3,200. Okay. So that's what I mean when I'm saying for me to participate, there has to be, I know where I'm out and I have a great idea of where I think the market could potentially go. Okay. Without knowing those factors, I don't take a trade. Just because it's moving in one direction, I kind of fight the excitement of just jumping in to jump in for no reason. Okay. So hopefully that helps. Are you using top step levels? I post top step levels daily, so I do use my levels. And the levels just don't mean buy or sell at those levels, right? Sometimes they're targets. Sometimes you got to see, if you open or close below it, whatever it could be resistance, maybe come a support zone eventually. So there's different nuances you got to look out for, right, in those levels. Okay, let's look at gold. All right. So here's gold on 5-minute. Man, gold has been quite the market. Quite the market. Okay, let's see what's popping in gold here. All right, let's just go to a 30-minute. Oof. All right. So gold has been doing all kinds of stuff here. You can see we had a very strong trend. We had the reversal take place right here. Okay, the reversal back and then the big sell-off. Nice, crown here. I mean, you can see, look, you kind of you see the crown, right? And it came through, it just sold off right down to this support zone. All right, and then it got very choppy. Right, chopped up, got to this, came back down, tested the line, came back, tested it, sold off, got above it, rallied. Okay, tested the neckline from this head and shoulders breakout right here, sold back off. Then we were looking at this thing to maybe continue its trajectory upside. So we drew this here. It broke down. Okay, it didn't survive. It sold off. Got back below this level here. Okay, and you can see it was respecting the line for a little while, right? It got back below it. It was trading below it, and then it kind of toyed around, and now finally we're back up above it. Okay, so with gold, I'm going to put this line on right here. Okay. And I want to look at something here. All right. So does anybody see anything here? Yes, Rob. Okay. Oh, what's this? Hold on. Did my screen change? Hold on. What screen is up? Okay. All right. So let me show you this here. So those of you that aren't familiar with market profile, so this is a question from Rob. All right. So let's do gold real quick. All right. This is crude oil. Hold on. Let me find gold. So the market profile is different. It's similar to volume profile. These are 30-minute. Um, these are 30-minute bar periods, right? These are 30-minute auction periods. But the gold, I start mine at 8:30. Really, the market starts at 8:20. But this shows you 30-minute bars, okay? And then you have your initial balance is set, and then value low, value high, point of control. Here's the volume profile here on the right, okay? And then it's different, but it's similar, okay? So here, watch. So we go to gold, we go to 30 minutes, and 8:20. So 8:30 right here, right? So 8:30 to 1:30. All right, so there is our daily profile in gold. This is 30 minutes, right? So A period, B period, C, D, E, F, G, H, I, J, K period is end of day in gold for me. That's the close I use, 1:30 close. So actually this would be here, 1:30 to, yeah, okay. So here's value high, here's value low, here's point of control. All right. And you can see here the gold was in a trend. Go to the 5-minute. Let's look at the open range trade here in gold real quick. So gold opens up at 8:20. Let me take this volume profile off real quick. So today gold had a successful open range trade. Paid out very, very handsomely today. All right, so this is open range high. And here's open range low. All right, and let's put on the long tool, long position. And this is our open range. Okay, let's measure how many points of risk. Okay, this is 34 ticks of risk. I usually like to risk about 25 ticks. So I would work along, say there. And it looks like it would have been filled, right? So 5-minute open range, we pop the high, we pull back, we're filled right here. We almost get stopped out, right? It gets halfway through, stop. And let's see, the end of the day, sometimes these open range trades, you hold them all day, right? Till the end of the day. 1:30 is our close, so we get out at 125, if not high. Okay, so here you go. So 25 ticks of risk on an open range trade in gold today. And you can see that it gave a reward of $2,340 on a one lot gold. Okay. Put the VWAP on, and let's see what we're working with here. So open range trade. Okay, if you missed open range trade, you had another opportunity right here to get long, and you had another opportunity here to get long. All right, and another one here to get long. So there's multiple opportunities to get in on this trade today if you missed open range. Okay, the next trade entry could be right here. Okay, where you get this push up, this pullback. What do we have here? Tell me what is this? Okay, what are these? Mini bull flags, right? So when you get these opportunities, okay, and these are only going to come in a trend. This is a trend. Okay, it's not chop up down like that, right? This is a nice smooth trending market. So you could take longs. Okay, I could risk 25 ticks to my low. You know, whatever it is you risk, 20, 30 tick, I don't know. But, you know, that's a 3.5. You know, if you wrote it out, it's another 7 to 1 there. Okay, you have another opportunity here again. Okay, to get the long. Oops. Sorry about that. All right, so there's another opportunity here. So this rejection candle is ideal for me to look at. Okay, this is a dragonfly doji, I think is what they call it, and it's a bullish signal, right? This was a big red candle. Okay, this started off here, opens here, it comes down, it's all red. Then the buyers rip all the sellers, they rip them to the upside, and then it closes bullish. That next open right here, I can take that long, all right, and risk this low. It fits my risk appetite, 25 ticks, perfect. So I'm long, I'm making a little money. It pulls back down. Now I'm like, oh my God, I'm gonna get stopped out. I always do. And then what happens? The bulls take control, and they keep pushing this market up. Okay. So this opportunity gave a 5 to 1. So 25 ticks, that's $1,250 to the high here at 12 o'clock. All right. So there's opportunities in here, everybody. There's a lot of opportunities. You don't have to go crazy. You know, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. Right? You don't have to do that. You just have to look for locations where you can minimize your risk with a potential for a bigger reward. Okay. Now, just looking at it, right? You can't really. It's hard to say, right? But let's look at it like this. Actually, let me put this. All right, and then we're gonna call it a session here. So 5-minute open range right here. Okay, 5-minute open range comes up. We bounce off the VWAP, right? The VWAP is trending higher. That's in our favor. All right, here's the market, and we're looking for a pullback. Boom. We get this doji, right? Dragonfly doji. You could buy it on the next bar, right? We tested it, and now we could buy it on the next bar because it came back, right? We have a bullish push. We also have an upward sloping line, right? So bullish, we pull back, we get this nice dragonfly doji. I could buy the next bar. Boom, I'm long. Okay. Put my stop in. Okay, here's my stop. Long right there. Here's my stop. All right, and now we're in. And we don't know where it's going to go. We're starting to move. At this point, we have how much in this trade? We have already 2.5 times the trade, and we're still pushing. Okay, I can stay here, right? We're still hugging this line. All right, I'm okay with that. I'm okay with that. As long as we're hugging the line, right? If you miss this long, you get in here on this one. Came down, bullish, boom, buy it. All right. All right, at this point, we have 4.23 in the trade. I'd probably exit at 5. Okay, at 5, that's $1,250. There we go. There's our 5 to 1. So we can exit. All right, $1,250. I'm cool with that. And then boom. All right. End of day. All right. So hopefully everybody's getting some nuggets of information from this here. There's no holy grail to this. It's all about the risk management. It's more about limiting your risk, right, than really, getting big winners. Okay. So always know where you're wrong, where you're going to get out. You don't see this bar here, right? And you just buy it because it's big and green and it looks good. And then your risk all the way down here, right? You want to wait for a little bit of a pullback and get a little structure to hide behind. Okay? But this volume profile is something that I use daily. Okay? And you can see here that value is moving. Okay? Value is moving up. Point of control is moving up. We're in a bullish setting, right? You can see it's pushing this here. This starts here, point of control, right? And you can see point of control is moving higher. It's pushing with the market. Okay, point of control, the volume is pushing up. What else do we have here before we go? What do we have here too? What is this? What pattern is this here? There you go, fam. All right. So there it is. We have an ascending triangle, right? They're buying it, they're selling it, they're selling it, they're selling it, they're selling it. A lot of guys are getting short, and we're squeezing the shorts, and then boom, explosion. Come back, test it, see if it's a true level, test it right there, and then back up we go. All right. All right, so we're going to leave it at that. Hopefully, you all learned something today. We will see you back Monday evening, same time, same channel. Have a great trading day tomorrow. Protect your accounts. It's Friday. It's a new year. Okay, we want to start the new year off right. Don't start getting crazy and gunslinging it. Okay. Target Chris, I'm here Monday through Thursday during the week. So we cover this stuff day in, day out. All right. And I wish you all a great trading day tomorrow. Just protect your accounts and live to trade another day. And we'll see you. Have a good weekend, everybody. All right. Have a good weekend. And let's work on getting everybody funded this year for 2025. That's our goal. All right. Take care. We'll see you on Monday.